Hi everyone. Just give it a couple of minutes and just to check that you can all see my screen and hear me okay. Good morning, Grenville. Thank you very much. Thank you, Florin. John, as ever. Jackie, thank you. Hi, Nick. Thank you. Good morning, Bill. Nice to see all the usuals here. And a few extras as well. Nice. Okay, let's get going. Welcome to my daily trading webinar. On Thursday, 14th of March. Markets are basically doing nothing. I'm sort of I suppose I'm a professional, and I therefore shouldn't really be using bad language, but I cannot believe how insanely difficult it is at the moment to catch any direction. The markets are not going anywhere, and it just makes it calling directions on a daily basis is just almost impossible because it's news flow driven. It's news flow driven out of the US with these trade tariffs, and subsequently we're going to be news flow driven out of China's decision on how to respond to these trade tariffs. So you get this sort of swing back and forth of risk appetite. I spoke to you on Tuesday. The markets were looking pretty rosy. Risk appetite was improving. We saw the yen weakening. And then Donald Trump again moves the markets, and he moved the markets by that announcement of sacking Rex Tillerson. And subsequently to that, there have been reports that they're now sort of debating about China trade tariffs as well. So subsequently, we've seen a sort of big shift in towards risk off. And what you have seen within that is equity markets falling away. S&P 500 especially. Let me show you S&P 500. It's been a big sharp move to the downside in the last couple of days. And it just makes it really difficult because this the markets are. I'm going to show you a series of charts today that just show you how incredibly flat and meaningless these market moves are at the moment. And you try and sort of look for direction out of what we're seeing on a daily basis, and there is none. There's just a series of sort of consolidation moves. Euro dollar is in a 400 pip range, but it's tightening within that. You've got these converging trend lines, and the markets are just going nowhere. Cable seemed to be sort of breaking out from its own consolidation band, but just cannot get above 140. And every time it sort of gets towards that, it just fails, falls over, drifts a bit. And let's show you what was I going to show you? Gold. Gold is the classic one. Why is gold not moving? Why is gold not moving? It's incredible. Like, you've had this sort of shift into safe haven plays on these trade tariffs. Why is gold not moving? It's exasperating me. It really is at the moment, and I'm really not sure what to do about it. You've got the dollar, which is basically in the last couple of sessions gone nowhere. And there is an air. I still believe that the dollar will be going lower in due course. And rallies on the dollar are a chance to sell, and I see that across my charts. However, it's not doing it yet, and it's really struggling. And that is despite the fact that we're seeing Treasury yields starting to fall over. Sorry, that was the wrong chart. Treasury yields starting to fall over. 10-year dropping away. The US yield curve, 2-year, basically gone nowhere. US yield curve, as by the 2-10 spread, which I've talked about previously, is flattening again. That is dollar negative. And this 10-year yield, if that goes below 279, again, that would be sort of moving towards more dollar negative angle. Inflation didn't pick up this week on the States. I mean, I talked about inflation. CPI didn't really move. Retail sales yesterday was worse than expected. Market didn't really react to it, and you're seeing a real struggling for the markets to really generate direction. Now the yen is the only real one. I mean, I was sort of pointing to. I spoke to you on Tuesday when the yen was sort of breaking out above 107, looked to be gaining traction. These momentum indicators were sort of turning higher. The stochastics were at that stage. They were at sort of 2-month highs. The RSI was sort of looking to sort of move into the high 40s. And it's just completely flipped on its head again. Ever since, I'm going to show you the dollar yen candle. That was the announcement of Rex Tillerson being sacked, 107.29, and the market did a complete reversal on that, and is now sort of yen strengthening. 106.35 is a key level on dollar yen. I mean, I've been looking at this for a while as a pivot. Having been supportive, it's now a basis of resistance. You've got this little downtrend in tech. I think this is probably one of the only charts at the moment you could trade is a yen-based charts, because every other chart is basically going nowhere. And the only other thing I've got is a uptrends developing on Aussie dollar, Kiwi dollar. Kiwi dollar. Let's show you the daily chart. It's much better. Kiwi dollar has that move, but you've got this red bear candle that's developing. So unless that sort of starts to build support again around 73 figure, which I think is a breakout level, then you couldn't really sort of trade that with any conviction. It's really difficult to trade with conviction at the moment because these markets are very much lacking direction. Sorry, I've had a few comments. Grenville, I'm a Dow and DAX man. I will talk about Dow and DAX. I will do that. Grenville talk in a bit once I've had my little rant about Forex. Are there any volume? Is there any volume in the market, or is everyone just sitting on their hands? Volume indicators don't look great, I don't think. I mean, let me just have a look. Sorry, it's something that I hadn't really been sort of looking at. Just looking at. Yeah, I mean they're fairly normal-ish. I wouldn't say they're sort of out of this world abnormal. It doesn't really look as though anything decisive is going on. But the yen, as I was saying, just back on the yen pairs, we are seeing some breakdowns on the yen pairs. Sterling yen, if that's broken an uptrend, and if that goes below 46.90, that is once again a sort of a key level breaking down. But you could argue, I mean, there are suggestions that maybe China is going to sort of not react with retaliatory trade tariffs, and maybe they're sort of willing to enter into negotiations to prevent the US from enacting these trade tariffs that they're sort of contemplating $60 billion worth of on China. And if that's the case, we're just looking at news flow again, because news flow could completely turn around once again, and that would improve the case for that would once again see the yen coming under pressure again. So it's just very difficult at the moment, because there is, as I said, a lack of direction across the majority of the Forex majors that I look at, apart from the yen. But again, the yen could turn around on news flow. So you could put sort of short positions on these yen pairs, sterling yen lower. Euro yen is another one that I'm looking at. Euro yen below 131.15 that had been a key level. That's interesting. Below 130.50, I think would be probably a confirmation move on euro yen. That reaction low there. But again, I mean, you could trade it now. You could trade these yen pairs now, as long as you stick very closely to the news flow. And then if the news flow shifted again, then you need to sort of start thinking about sort of changing your positions, because at the moment the yen is under pressure the yen is strengthening and dragging these yen pairs lower. But yeah, it's just really difficult to really sort of see what we're doing. Right, okay, so Grenville was going on about, I say going on, that's fairly rude, isn't it? Was talking about the DAX. Now, the DAX is interesting because it has come under pressure in the last sort of few sessions, and rallies are being sold into. Again, what we've seen today, yesterday, early morning rally got sold into. Today, early morning rally getting sold into. Back below the 23.6% fib level, back below 12,285, which I've been looking at as a level, sort of as a pivot. And here we can see on my, I do, Grenville, I don't know whether you see, I do daily DAX analysis on the website, so keep an eye on that if you want to keep up to speed on what I'm thinking about these charts. But there is sort of a pivot on the DAX around 12,284, and the market's back below it. But you could argue that market is ranging again, sort of ranging. Really, is it ranging? You look at these momentum indicators on the hourly, fairly neutral, nothing really doing. And you'd get direction, I think, on the DAX below 12,162, which was that reaction low that we saw on Tuesday. If you see a move below that, then you are starting to really roll over again, and then you'd sort of see that being that 12,460 level being another lower high. Despite the fact that we've broken that downtrend, you'd then sort of move back into a sort of a more of a corrective phase again. But look at these momentum indicators on the DAX, negatively configured. RSI failing at 50, rolling over. MACD lines sort of nowhere near neutral. Stochastics turning lower. So there is still a negative aspect to this DAX chart and selling into strength. In each of the last few sessions, the market has sort of opened and sort of sold off intraday, shall we just say. And again, it happened yesterday. Again, it's happened today. And that doesn't really suggest that it's a strong market, does it? Now, in terms of the Dow, I'm looking at the Fibonacci levels of this retracement. Again, I've got Dow analysis on the morning report. And look at the Fibonacci levels of this big sell-off. They are really interesting. The market is, I think, paying fairly strong attention to them. Now, obviously, because of the levels that the DAX trades with, it's difficult to sort of really trade them to the tick. But yeah, just watch out for that. And you've got this uptrend channel on the DAX that the market's come back to now. Again, with the 38.2% fib level. That's a reaction low. So we need to sort of see that holding. And if that breaks the downside, then you're looking back at that low again, that reaction low, 24,217. So the DAX is under pressure. 3 strong bear candles and getting more significant in magnitude as well on the Dow. So that doesn't bode well. You've broken that little mini uptrend. You could argue, and I say could, that this is sort of a rising wedge. So you could then sort of measure that move to the downside and then measure that again from there. And let me just do that very quickly as a crude analysis. You'd measure that length of the downside move, and then you'd project that from the other the reaction high. Essentially, it's a Fibonacci projection, and that comes in around 23,950. So there is room for downside on that Dow. I don't really want to start calling that until that uptrend channel has been broken, and that reaction low at 24,535 has been broken. But yeah, again, I'm going to show you another chart that just reflects the just sideways move. Look at silver. Silver is not only a safe haven play, but also an industrial metal as well. So it has aspects of both sort of a safe haven, but also a growth play. Market's going sideways. It's basically gone nowhere for 2 weeks, 3 weeks. Look at oil. Again, another chart where you've got these converging trend lines. Again, market just a whole sort of range of mixed signals going nowhere. Really is so frustrating at the moment that you cannot get direction from these markets at the moment. These charts are telling us nothing because you've got such a sort of a swing and a fluctuating sort of news flow out of Trump and the US on trade tariffs, on these this sacking of Rex Tillerson again played into that. You've got the news of the meeting with North Korea that's likely to happen around May, before May. Again, it just all sort of builds into a picture of really sort of mixed news flow that just doesn't really drive any directions through the market and makes trading markets really difficult on an intraday basis. And that is what we're seeing with these markets. You're seeing sort of a couple of days up, couple of days down, couple of days up, couple of days down, and then again we've seen. I mean, on WTI, for example, $60 is holding as a support, and that's good. But if it breaks to the downside, you've completed a descending triangle. So there is still this sort of trend of near to medium term negativity, but you could then pull that out and say, well, that's still an uptrend on what's that, a 6-8 monthly basis. 6-month basis. So it's just all sort of plays into the fact that the markets are really difficult to trade at the moment. And as I said, you can trade these yen pairs as I've had on this chart here. You've got dollar yen as falling. You've got euro yen on a break below 130.50, and you've got sterling yen. And again, preferably on a closing breaks of these moves. Sterling yen below 130.50. Now dollar yen, I mean, this is probably the only chart at the moment that I would really look at, because you've got this trend developing. Also 106.35, that now becomes a basis of resistance. You could sort of trade it around 105.90, maybe 106, back towards that downtrend, with a stop above 106.35, maybe 106.50, 106.45, 106.50, give it a little bit of room above that pivot. But what sort of room do you have as a move? Well, it seems as though the market keeps coming back towards 105.50 and then bouncing. 105.25. There's not a lot of room, really. I mean, like, what's that? Gives you 50 pips, 60 pips of downside for the risk of 50 pips of upside. It's just like the risk reward of that is terrible. So you've really got to be careful. Okay, just one from John here. Best chart is Swiss yen. Now we've had Swiss National Bank today. So, well, both of those are safe havens. CHFJPY. So that's yen strengthening against the Swissy. Sorry, I've never looked at this one before. Why not give it a go? But that's basically euro yen, because euro yen is sort of very similar, and that's a little rally. I mean, like, okay, if I get euro yen up, it's not dissimilar to that, is it? Because euro Swissy is basically sideways. Okay, so Swiss yen. Sorry to say that. But yeah, I'm sort of negative on euro yen now. I mean, there is a basis of resistance, 1250 area to 13 big figure. You got that downtrend, renewed downtrend. Yeah, that's not too bad. But you look at the MACD lines; are they in the process of sort of turning higher? That's what they did here, and then subsequently you saw a rebound. So again, Swiss yen is a difficult one. I mean, you look at the moving averages, broadly flat. Is that not just a general range play? Wow. Yeah, I sort of look at those moving averages and think, well, that's not necessarily a trending chart. Yes, it's sort of broken that support there, but yeah, I'd be a little bit cautious about that. So yeah, just yeah, I'm not sure. Anyway, okay, so yeah, that doesn't. I know that some people will probably say that that doesn't really help me today, but I hope it does help you, because it just. I look at all these charts sort of every day on a daily basis, and they are increasingly exasperating me. So there must be other analysts, other traders out there that increasingly exasperated as well of the lack of direction. So given that, it is just a very difficult trade, and maybe you take on longer term positions. Maybe you play the dollar as a longer term selling pressure. Maybe you play the yen as a longer term buy. I think the yen is strengthening towards 100 yen in due course. On the dollar, and I think the dollar is weakening back towards 80 sort of 4 area on dollar on the trade weighted dollar. And I think that's going lower. This is always annoying, but look at that downtrend. Let me just zoom out. You can see how much downside you could retrace to on that dollar yen. On the trade weighted yen, trade weighted dollar, because of that huge move up that we're now currently retracing within a very strong downtrend. So yeah, I think dollar's going lower generally. So yeah, maybe you could put on longer term positions. Is a possibility to sort of ride out the noise, but it is difficult at the moment. So I hope that I've helped you today rather than hindered you. Given that, I will speak to you again next week. Thank you very much and enjoy your weekend.